And also, our next speaker, Amitoj Sani, leads the product and solutions function at Visa, covering the regional Southeast Asia areas that include Singapore, Malaysia, Thailand, and Brunei. Amitoj will be sharing with us about how powering the acceleration of digital-first experiences is important in our regional situation. So please do stay tuned for his speech and his address, and we will be back shortly.
Visa pioneered the electronic payments business more than 60 years ago, envisioning a world in which paying for something could be translated into electrons and photons that move across the globe at the speed of light.
The consumer may access an infinite range of goods and services whenever he chooses, wherever he may be.
Today, there are 3.4 billion Visa credentials around the world, from the largest cities to remote communities across the globe.
Good morning, everyone. Thanks for having me here to be a part of a very important event. We are going to be discussing the drive towards a cashless economy by accelerating the digital journey. At Visa, we are committed towards digitizing the entire customer experience, including the payment journeys across various channels. Over the next 25 minutes, my intent is to share some of the emerging trends in our Southeast Asia region and how they're having a profound impact on the ecosystem. And this is accelerating the pace at which less cash and more digital adoption is occurring. Malaysia is one of the leading economies that's taking the leap towards cashless at a rapid pace. Before we start, a disclaimer. The contents of this presentation should be used as a reference only and not for any trading activity in the Visa stock. Okay. Let's start with an overview of our region. And most of us are no strangers to some of these stats, but it's a good reminder to see how dynamic this region is. And Malaysia happens to be right in the middle of where all the action is happening. Southeast Asia is a grouping of 11 nations, fitting snugly between three powerhouse economies of India, China, and Australia. With a population of nearly 2/3 of a billion, it boasts a dynamic and young demographic with rising disposable income. Southeast Asia also has the third largest internet users, along with 300 million smartphone users as well. From a business ownership point of view, at least 95% of all businesses are micro small that employ over half the working population. Lastly, our region is poised to become the world's fourth largest economy by 2030. That's just 9 years away. And this transition will be championed by an increasingly tech-savvy young population that is rapidly rising up the socioeconomic ladder. Let me talk about a few consumer habits that have formed, behaviors that have formed after the pandemic. COVID-19, as you all know, has led to massive changes. And this just does not relate to payments. Consumers have developed a variety of new habits, many of which are expected to stay even after the pandemic. These habits were only present for an average of 7% of consumers in Southeast Asia before 2020. In addition to changing the way we pay, it has also changed the way we shop, with consumers now increasingly shopping at big online marketplaces, from home-based businesses, and even from local businesses. Let's talk about this transition in a bit more detail. Cashless payments in Southeast Asia. Based on a recent study that Visa conducted, we found that 85% of consumers in this region use cashless payment methods, which is primarily being led by Singapore, Malaysia, and Indonesia. The cashless payment methods include cards, online wallets, QR codes, contactless cards, and even mobile contactless. The shift towards cashless has been driven largely by the adoption of contactless payments and card payments. The global pandemic has accelerated the transition towards a cashless society for individual markets. In markets where cashless adoption has already had a head start, COVID-19 accelerated the transition by at least 3 to 5 years. And you would notice that Malaysia has the largest gain of 5 years among its peer nations. More than half of consumers in Southeast Asia prefer cashless payments in light of COVID. And nearly a similar number carry less cash in their wallets compared to before 2020. Health and safety concerns have also led to greater preference among consumers for cashless payments. Categories we might expect to go fully cashless in the upcoming future include essential spends such as bill payments, supermarket purchases. And this is likely due to their routine or recurring nature. We believe categories where convenience is prioritized, such as taxis and ride sharing, convenience stores, and public transport, have also seen greater usage of cashless payments. Prior to COVID, we were seeing already strong digital payments adoption in Malaysia. But today, our contactless payments penetration has exceeded 60%, which in a nutshell means for every 10 transactions, 6 are contactless. This is a result of Visa working with our merchant partners to expand contactless payments acceptance in new categories. And clearly, Malaysians have also embraced the benefits of contactless payments, such as convenience and efficiency. Now, different cashless methods are gaining traction across various markets, and consumers increasingly have an abundance of choice. But the 3 most common methods are using contactless enabled cards, using mobile phones for contactless transactions, and lastly, QR codes. Contactless cards, for example, are preferred heavily in Singapore, likely due to widespread acceptance of contactless payments. On the other hand, in Indonesia, online wallets lead the way due to a variety of e-wallet players making digital payments more accessible to consumers. Contactless cards are fairly popular in our region, but with significant room to grow in several markets. 82% of consumers are aware of contactless cards, although only 38% of consumers use them. However, 75% of non-users are interested in adopting contactless card payments. The key drivers of using include convenience from not having to carry any cash, faster transaction speeds, and greater ease of use. Mobile contactless payments are also popular in the region. 89% of Southeast Asian consumers are aware of mobile contactless payments, but only 43% of consumers use them. This is currently not available in all the markets in Southeast Asia. 70% of non-users are interested in adopting mobile contactless payments. This is led by Thailand and Vietnam. The key drivers to use include convenience, again, from not carrying cash and even cards. Let me talk about QR codes, which have gained traction in Southeast Asia due to the salience of QR codes beyond payments. Consumers like us are familiar with using QR codes to scan or log into applications, get more information on products or directions. QR codes are particularly widespread in markets like Malaysia and Singapore, where they're also used for restaurant menus and contact tracing. We see high awareness for this payment mode in Malaysia. And the key drivers again include convenience from not having to carry cash or cards. So while there are different methods, the adoption or penetration varies across markets. And ideally, all of them lead towards cashless behaviors, which will remain well after COVID is gone. Although more consumers use cards in Southeast Asia compared to e-wallets, e-wallets are being preferred over cards. E-wallets score on speed of transaction, convenience, and physical safety, even though cards are perceived to be more widely accepted. Significant dual usage exists in the region, largely driven by online payments. More than half of Southeast Asian consumers currently use both e-wallets and cards for making payments. An important point. Consumers' preference for e-wallets will drive greater growth and usage in future, especially if consumers perceive them to be more widely accepted. At Visa, our objective is very clear. We will work with all partners, including e-wallet partners, to ensure that Visa is at the center of each payment transaction flow. For some of the wallets, Visa is used as card-on-file solution. For others, a top-up option. Our aim remains to ensure we work with partners to accelerate digital payments adoption in the country and ensuring Malaysians are able to pay for their purchases seamlessly, be it buying an item on a large online marketplace, ordering food, or taking a ride-hailing app. Super apps. I'm sure most of us have one or more on our phones. Our research shows that 84% of consumers in Southeast Asia prefer the convenience of using one app on their phone to conduct their regular transactions. The growth of super apps in Southeast Asia is one of the contributing factors that led to increased usage among consumers. The perceived safety of mobile payments has improved significantly in the last year. In 2020, 86% of consumers perceived their personal information to be safe when using their mobile devices to make payments. And this number increased by 17% over last year. Despite the improvement, there still exist several aspects that cause concern and affect the usage of mobile phone payments. If I were to say, the top two security concerns include losing or having your phone stolen and having your phone hacked or someone intercepting the data. We believe that mobile-based payment solutions are likely to continue gaining traction in our region. And this is due to the trend of super apps and increasing consumer trust in mobile payments. While e-commerce usage has been growing in strength over the past few years, especially with the rise of online marketplaces, but COVID-19 has further accelerated the shift. Interestingly, Visa's data also showed that more cardholders were making e-com purchases for the first time during the last 8 to 9 months. We saw total e-commerce spend increase by 7%, while face-to-face spend decreased by 13%. Not surprisingly, e-com spends increased for all categories except transportation and entertainment. Essential categories witnessed the most drastic increase in e-commerce spends. And consumers were also shifting to e-commerce platforms for their retail shopping needs. Let's now talk about online shopping in detail. Nationwide lockdowns and movement control orders in a bid to curb the spread of virus accelerated the growth. 44% of consumers shopped less frequently in person at physical outlets. Not surprising at all, right? As you notice, more than 50% of Southeast Asia customers have shopped more frequently through their mobile apps, using their mobile phones, and through social media channels. With many consumers turning to e-commerce, big online marketplaces have seen the largest growth. At the same time, consumers are more likely to support home-based businesses. Some consumers are also making the effort to shop local, with almost 29% of consumers purchasing more frequently from local businesses. Home delivery. Now, home delivery is widespread in our region, with double the frequency due to the pandemic. 83% of consumers use home delivery. Guess what? 32% of them are new users. That's a sizable increase over a period of just 12 months. In terms of payment methods used, existing users of home delivery are more likely to opt for online payment before delivery, while new users are more likely to opt for cash on delivery. COVID-19 has resulted in many local businesses struggling to keep afloat amid the economic fallout. In a recent insight paper that was produced by Visa in collaboration with the Singapore Tourism Board, we found that local brands in Singapore have been worst affected by the pandemic, experiencing double-digit negative growth. To support local business recovery and growth as a new normal, we've launched Where You Shop Matters in Singapore, Malaysia, and a few other countries. This is an initiative that encourages consumers to support their local businesses while helping SMBs go digital. It is also a part of our broader small business strategy and follows on our commitments that we've made to support 10 million small and micro businesses in Asia Pacific. Visa has also partnered with e-commerce enabler platforms such as Ecommerce to provide onboarding support and special rates for SMBs to sign up, with the intent to start selling online to assist them in their digital transformation journey. Let me shift gears now and talk about digital banking in the region. This is a phenomenon that's been taking shape over the last 2 years or so, led by Singapore and Malaysia, and it's now getting more prevalent in other geographies as well. In a nutshell, digital banks are a new class of banking institutions which are generally technology and mobile first, with limited or no physical distribution. These are across both retail and wholesale banking and generally licensed by the central banks in most geographies. How did it all start? Well, the intent of the regulators was to address the needs of unbanked and underbanked, and thus bring the benefits of cashless to the masses as well as small businesses. I'm going to take 3 examples of 3 countries. Singapore, where 2 different types of licenses have been awarded recently. These are full banking licenses and wholesale focused licenses. You can see the names of entities. They are household names in the region. Similarly, December 2020, Bank Negara in Malaysia announced that applications are now open for digital banking businesses or Islamic digital banking businesses. Up to 5 licenses may be issued, and we should expect the grant in early next year. Lastly, Thailand announced that brand new digital licenses is not a prerequisite for digital banking experiences. Partnerships, joint ventures, consortium models with close collaboration can be a model of success. And even stepping into digital lending by combining bank, card, mobile app data to create new scoring models. Let's dig a bit deeper and understand this in more detail. Before the digital banking licenses were issued in Singapore, Visa conducted a research to assess consumers' interest in using digital banking. 67% of Southeast Asian consumers are aware of digital banking, and a similar number are interested. The key drivers of interest include eliminating time spent waiting in queues, normal, speed and convenience, as well as anytime access. We also heard that the key barriers to interest include concerns about unauthorized or fraudulent transactions, possibility of getting hacked, as well as a preference for human interaction. Interestingly, consumers are more interested in digital banking services from traditional banks. However, they're also open to banking with financial services brands, well-known non-financial brands, and new startups. Other types of providers thus also have a big opportunity in digital banking, given the high interest in services from a variety of providers. The services most desired with a digital bank are the less sophisticated ones, such as P2P money transfers, bill payments, as well as deposits and withdrawals. There is a lower desire at this point of time for services such as investments and loans. As a next step, and more forward-looking for the region, beyond cashless, the push towards digital is also creating new digital players who are bringing innovation from and to the fintech space. And this is driving the open banking opportunity. During our research, we found out that 59% of consumers are willing to share their financial information with providers, making open banking a very possible future in the region. Consumers are willing to adopt open banking if it ensures greater speed and efficiency, more personalized financial products, and more choices in service providers. Now, the top 3 organizations that consumers would trust with their financial data include banks, payment providers, and surprisingly, even governments. Once organizations have gained the trust of consumers and they're granted access to the data, they would gain access to an array of information, including bank account history, credit card history, loan application and payment history, and so on. If I was to call out the key barriers to adopting open banking, these include lack of confidence in institutions protecting their data and the fear of receiving unnecessary advertising from companies. Now, as the consumer journeys become more seamless, we expect payments becoming embedded as an invisible part of the journey. Let's take 3 examples, which are partly present in some of our markets, but there is room to further grow. Social media platforms like Facebook, Instagram are integrating payment systems into their sites with the intent to allow users to purchase directly from brands. Product suggestions are made via these social media platforms and are seamlessly integrated in your feed with easy checkout. For instance, Instagram shopping. Social commerce integration is popular in Southeast Asia, especially for markets with consumers who anyway spend a lot of time on social media like Philippines, Thailand, Indonesia. 60% of consumers in the region are aware of social commerce integration, and an equal number have shown an interest in it. Smart checkout. What does it do? It allows consumers to scan their products with their phone as they pack them up, creating a digital basket to easily pay for without further scanning at checkout. This has moderate awareness in South Asia, but generates high interest. The drivers to interest include the transparency that comes with seeing the full bill before checkout, as it can help in budgeting. Speed and convenience are also perceived benefits. Smart devices, similar to IoT, can detect and help perform tasks that users program it to do. For example, a fridge that detects that you've run out of milk can make the purchase on its own. Almost 60% of consumers in Southeast Asia are aware of the ability to make purchases via smart devices, and the interest is also high. The main drivers are speed and convenience, and the excitement that a new innovative product brings to consumers. But at the same time, among all these, there are obvious transaction security concerns currently, but which we believe will go away with time. Before I conclude, I do want to share an example from a retail setting in Singapore. While we've been focused on mobile and cashless journey from the comfort of our home, the pandemic did not stop the advent of innovation, particularly for retail merchants who were looking to innovate and create a more seamless user experience journey. Visa, in partnership with our strategic merchant partner, NTUC, launched an AI-enabled unmanned store for the convenience store brand called Cheers, replicating the Amazon Go experience. To enter the store, consumers must add their Visa card to the Cheers app and scan a QR code or use facial recognition. The venue's cameras and sensors then determine what consumers are selecting and automatically charge their Visa card for the purchase upon exit from the store. No queues, no checkouts needed. Customers just walk out of the store. A store like this is not just a great experience for the customers, but also helps the merchant to reduce operational overheads, increase revenue, and keep the store open 24/7. With that, thanks again for this opportunity. And I'm keenly looking forward to Malaysia leading from the front on digitization and cashless journey for every Malaysian.